Also, new technologies coming soon, like silicon anodes, solid-state batteries, and lithium air, that could skip us ahead on the experience curve by more than a decade, making battery-powered trains, ships, and even airplanes possible. So imagine a world where city skies are clear of pollution and where electricity is cheap and abundant. It's not crazy to assume that 20 years from now, over half the world's power will come from nature, backed by batteries. And it all might be happening sooner than you think.
Good morning and a very happy new year. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the F&O cues. I'll talk about the general trade setup. And the trade setup, currently we're not getting enough cues from the global equities or the commodities because most of the markets seem to be shut on account of New Year. But we're getting some bit of cues. The SGX Nifty is trading with very thin volumes. It's down almost 5 points as we speak, about very thin volumes in the Singapore exchange. The ADR picture, Tata Motors was up almost 2%, Wipro was up almost 1%. What didn't do well was Vedanta. Vedanta saw a big crack that came in. So that was the cue. Vedanta was down almost 1.5% in trade. One of the only few ADRs which ended up on the losing side. As far as crude is concerned, in morning trade, there's no trade that's happening. But overnight, a 1% gain that's happened on the crude. The WTI managing to close about the $60 barrel per mark. And it was the second weekly, it gained almost 3% last week. And for the second week in a row, we had a positive weekly closing as far as crude was concerned. As far as base metals are concerned and commodities are concerned, China is shut currently, but it was a mixed close for base metals on the LME. Nickel was up 3%, tin was up almost 0.5%, and zinc was up almost 0.5%. What didn't do well? Lead was down 1.5%. Aluminium and copper were trading weak on LME. As far as gold is concerned, even no trade in the morning session, but closed with gains for the 7th straight session. As far as FI flows were concerned, FIs remained net sellers. They sold in 600 crores in the cash market. DIs were net buyers in the market. They bought in almost 460 crores. So if you take a month into consideration, FIs were sellers to the tune of 5,200 crores, and DIs were aggressive buyers for the full month. They bought in almost 8,142 crores in the cash market. As far as the Nifty is concerned, Nifty had the 4th straight weekly gain or a positive close that came in. We ended about the 10,500 mark in trade. Real estate as a sector has been a marked outperformer. It's gained more than 100% this year. What did well on Friday was the auto index. It gained almost 1.3%. And remember, today the auto sales number will come out. And Nifty metal index was down almost 0.5%. The Nifty was up almost more than 50 points. What contributed? TCS, Axis Bank, Tata Motors and HDFC contributed on the positive side, while HDFC Bank, Reliance, ICICI and GAIL contributed on the negative side. But Agam, what's the F&O queue like for the first day of the new year?
Well, good cues coming in as far as the first day is concerned, considering we have seen so much support building in the lower levels as far as the Nifty goes. But starting off with the Nifty futures, as you can see, we're looking at fresh longs building in, considering we've seen another 5% increase in open interest. When it comes to the Nifty Bank Index, while the index itself didn't move too much, we have seen a little bit of unwinding coming along as far as futures go, with the VIX also moving up to a certain extent, now at around 12.7. The Nifty put call ratio, however, remains unchanged at 1.6, so not too much coming in there. But as I was suggesting, we are looking at a lot of writing in the 10,500, 400 and 300 puts, which means that there's been a substantial amount of support building around these levels. We can expect the Nifty to move higher, at least in today's day of trade, perhaps over the next few sessions as well. But in terms of stocks, so we're watching out for two which have moved into the band. So we could see restricted trade in HDR and JP Associates, and we have fresh longs continuing to build in something like a Reliance Communication, or for that matter Wockhardt, which is also seeing a substantial accumulation in open interest. So we'll be watching out for these cues as we move into trade today. But we have Darshan coming back, who will be telling us about all the big brokerage bets for 2018.
Yeah, so Agam, it's a new year and quite a few brokerages have come out what they believe could be the topics for 2018. Credit Suisse, for one, believes that SBI and ONGC could be potential outperformers. 23% gain in SBI and a 13% gain in ONGC. Given the fact that the gain from SBI life listing will aid SBI significantly, and for ONGC, higher crude prices and oil and gas prices prices is something that will aid the company. Axis Direct likes two stocks, Interglobe Aviation with the target price of 25% upside. They believe that the capitalization on passenger traffic and low operating cost will benefit the company. And SBI Life Insurance, they believe a 22% upside is possible, given the fact that the embedded value CAGR of 19.5% is something that they estimate could come in. The other brokerages that have come out with notes are Carvey. Carvey believes that Yes Bank could see a potential 52% upside, given the fact that they expect NIMs to improve by 3.6% in the next 2 years. And Natco Pharma, they believe a 36% upside, given the fact that there is limited competition, which will mean that the price, erosion will be lower and lead to higher cash flows for the company. The other brokerages that have come out with notes are JM Financial. They like L&T Finance and Tata Motors, 35% upside on L&T, because the company is focusing on the retail finance to improve return ratios. And for Tata Motors, new launches, good demand, and expansion and capacity increase is something that will benefit Tata Motors. So these are some of the important brokerages. HDFC Securities, 45% potential upside in Nagarjuna Construction because of pickup in order inflow. And South Indian Bank, a 32% upside. They believe that the technology and banking to raise the efficiency and revenues and margins for the bank going ahead. So these are some of the big brokerages that have come out with reports in terms of what they believe could be potential 2018 bets.
Stock of the day is Lincoln Pharmaceuticals. Janus Consolidated Finance has picked up more than 2 lakh shares in the company at a price of 235 per share each. It's picked up 1% stake for a sum of around 9 odd crore. To give you a rundown of what Janus Consolidated Finance is, it's a group which is involved in the activities ancillary to your financial services and has a portfolio of around 125 crore. It's also invested in companies like Philatix, Manintra and Tidewater. The stock performance of Lincoln Pharmaceuticals, if you look at the 1 month return, it's been a 19% number, and also if you look at the yearly percent, the stock has fetched a return of more than 29% as compared to the Nifty pharmaceutical returns of less than 5% that we've seen, a negative 5% that we've seen for the year. Financials of the company, well, revenue has grown at an EBITDA of 14% in the 5-year period. EBITDA has grown at a CAGR of around 27% in the 5-year period, and PAT, that's also been a decent run at 40% in the 5-year period. To just give you a rundown about what the company is, it's a pharmaceutical company which has a market capitalization of around 500 odd crore. But then promoter holding of the company has come down in this 1 year from 35% to 33%. With this, let's toss it over to Shraddha for rupee market updates.
Well, with respect to the currency markets, you had the Indian rupee, which closed at a near 4-month high on the last trading day on 2017. So the Indian rupee ended about 20 paise stronger to the US dollar on Friday, remaining below that 64% per dollar levels. It was the 7th straight weekly gain for the currency. And for the year, or in 2017, the Indian rupee rose 6.4%, nevertheless underperforming most of the Asian peers. As far as the bond markets are concerned, the yields on the 10-year government bond settled about 7 basis points lower at 7.326%, gaining the most in 6 weeks and cooling off slightly after Thursday's 17 basis points spike that was followed on account of announcement of government's additional borrowing. But for 2017, yields are up as much as 91 basis points. We might see a muted day of trade as far as bonds and currency markets are concerned, owing to lack of volume. But with that, let's toss it over to Jayesh on commodities.
Shraddha, not many cues coming in the morning trade, but let's just recap what happened on Friday and for the year itself. For all of the commodities, it was a good year. WTI, in fact, closed above the 60 mark for the first time in over 2 years and gained more than 3% for the entire last week. Brent also closed up more than 1% and touched an intraday high of 66.98 for a barrel. So, this was the second weekly gain that it saw for itself, wherein it gained more than 3% for the week. As far as the entire year is concerned, WTI was up 6%, while Brent ended the year higher by 14%. It was a very good year for the base metal space. The LME base metal index, in fact, snapped its 10-day winning streak on Friday, But for the entire year, it gained as much as 28.5%, which was the biggest yearly gain that it saw for itself since 2009. As far as individual base metals are concerned, nickel was up 3.3%, which was the best performer on the London Metal Exchange, while lead was down 1.5%, which was the worst performer. Zinc and tin, ended marginally higher, while on the other hand, you had copper and aluminium, which closed marginally lower. As far as precious metals are concerned, COMEX gold was up 7 days in a row, and it has now crossed the 1300 mark for the first time since October 2017.
So when it comes to the auto sales and its expectations, we're expecting a very, very good month considering we had a low base and high discounts. So let's start off with what we can expect for individual counters. As you can see here, Ashok Leyland is expecting about a 49% growth year on year, and the likes of Mahindra Tractors and Tata Motors, as well as looking at well over 30 to 40% increase. Of course, good gains coming in for Maruti Suzuki as well as Mahindra, given the kind of traction that we are seeing building on that over the past few months. Moving in terms of some other expectations too, with respect to two-wheelers, Hero MotoCorp expecting about a 67% growth. We have good gains coming in for the likes of Bajaj Auto, TVS Motors, as well as Royal Enfield. So expecting a very strong month all around. That said, in terms of the factors that can drive growth moving in is firstly, of course, as I mentioned, a low base considering the fact that we had demonetization last year. Other than that, we also had bigger discounts, and of course upcoming price hikes is something that has led to a lot of customers buying more right now. We do have a general pickup in, of course, commercial vehicles demand, and of course don't forget that we are looking at a little bit of revival in the rural sector as well, because of which we can expect the two-wheelers to pick up substantially. Moving in, in terms of what brokerages are saying, we have Motilal Oswal, which says that higher discounts in commercial vehicles have been witnessed around this time around, and we see about near 40% growth in Bajaj Auto's exports, around 40 to 50% growth in TVS Motors bike and three-wheeler sales as well. But we could see about a near mixed performance from something like a Mahindra and Mahindra. In terms of Nomura too, if we can bring that up and what Nomura has to say, well, we're expecting the passenger vehicles to pick up, but passenger vehicles on the whole is not showing as much growth. So this is 6%. This is of course leaving the larger players like Maruti away. But once again, they're expecting about very mixed trends when it comes to Mahindra, and utility vehicles could be weak as we move into trade. But on the whole, we're expecting a very, very strong month for auto sales as we move in.
As far as the stocks that we're tracking today are concerned, you will have PSU banks, which will be in focus on account of the fresh equity capital infusion by the government in the form of CET1 capital that has been done for FY17, FY18. So the centre has pumped in close to 7,500 crores in 6 PSU banks. So they have put in about 7,500 crores in totality, of which 2,257 crores is in Bank of India. You have 2,700 crores in IDBI Bank, 323 crores in Central Bank of India, 243 crores in Dena Bank of India. That apart, they've also infused 1,375 crores in UCO Bank and another 650 crores in Bank of Maharashtra. So we do expect these stocks to see some positive reaction in trade today. That apart, we're also tracking IDBI Bank, which has sold 4.89% stake in SIDBI. Now, this is for an undisclosed amount. Earlier this year itself, at the end of September, they had sold stakes in 2 tranches in SIDBI. So that's another stock to track. Continuing with PSU banks, you also have Punjab National Bank, which according to a Mint report has hiked interest rates on term deposits by as much as or up to 1.25%. Remember, in December only, Kotak Mahindra Bank had also announced hiking the term deposit rate. So keep an eye out on those names. That apart, what we're also tracking is SAIL India on the back of a PTI report, which says that that has also joined in to bid for the stressed assets of SR Steel and Bhushan Steel. So keep an eye out on SAIL India. We're also tracking Brigade Enterprises, where the company has acquired 13-acre property in Bangalore for 218 crores. We're also tracking Control Print, where the company's QIP has opened and they've set the floor price at 475 versus the closing price of 458. So a marginal premium as far as the QIP price is concerned. Oil India, which has made 2 hydrocarbon in discoveries in Upper Assam Basin, and lastly also SRF, which has commissioned the first phase of its BOPP capacity at the Indore plant. So these are some of the stocks that you need to track in trade today.
Well, some more stocks to watch out for. Starting off, we have Aarti Industries. The stock was up 6% and saw delivery volume was up nearly 3 times at about 3.5 lakh shares as compared to its 5-day average. And the total volume surged more than 3 times at nearly 12 lakh shares as compared to its 5-day average. Berger Paints, the other stock to watch out for. It was up 5% on Friday and saw delivery volume was up 170% at nearly 19 lakh shares as compared to its 5-day average. And the total volume also up about 186% at nearly 36 lakh shares as compared to its 5-day average. Last and final stock to watch, UCO Bank. It was down 3.5%. Delivery volume was up 190% at about 18 lakh shares as compared to its 5-day average. And the total volume surged nearly 3 times at about 29 lakh shares as compared to its 5-day average.
On the big brokerages, first we have is CLS on HDFC Standard Life. Now they have initiated coverage on the stock with a buy rating and a target price of 455. Now HDFC Standard Life Insurance is one of the India's leading and most profitable life insurers and is set to benefit from the domestic expansion and market share again due to its wide distribution network and innovative product pipeline. The company also has an early mover advantage into credit protection policies which offers expansion opportunities for the company. Now the brokerage is expecting the company's new premium and embedded value to grow at a compounded annual growth rate of 24% and 18% over FY17 to FY20. It is also expecting the insurer's operating return on embedded value to be around 20% over FY17 to FY20. Now, HDFC Standard Life is most profitable insurer and leads the peers when it comes to growth and profitability. And on the back of this, CLS is saying that the stock deserves a premium valuation to its peers. Second, we have is BOFA-ML on Bharti Infratel. Now, they have maintained their buy rating on the stock but have marginally reduced the target price to 460 from 463. Now they're expecting volatility in the stock due to tenancy cancellation, and this cancellation and tenancy would be led by the closing down of Tata Teleservices and Aircel and because of the merger of Idea and Vodafone. Now the brokerage is expecting the Q3 numbers to show impact of rapid consolidation in the telecom industry. However, the exact impact of this will depend on how it gets accounted for, but according to the brokerage, the worst case impact could be just 3% of the consolidated tenancy when it comes to Bharti Infratel. Going forward, they're expecting the stock to re-rate as telecom companies are expected to sell their stake in the tower infrastructure company. Currently, Bharti Infratel is trading at a discount when compared to its foreign peers, and this is mainly due to the perception of conflict of interest as its biggest customer is its biggest owner.
Our thought process is that, as I mentioned, investment cycle continues to remain weak. So private sector capex, we clearly believe is still a few quarters away, primarily because private sector balance sheets are still leveraged, or there are instances where capacity utilization levels are very low. So in this backdrop, it's difficult to expect private sector to go out and do large greenfield project announcements or do large projects. So I think the onus for revival in investment cycle rests with government, and government is rightly focusing on things like roads, railways, housing. We all know a lot of announcements have come, and those announcements are getting implemented around affordable housing. Right. On roads, I have been given to understand next 6 months, it is expected that about 60,000 crore kind of road projects will come up for bidding. So there is clear traction on the government sector capex, on the roads, on the affordable housing side. So we are positive on companies which directly or indirectly benefit from this government sector capex. So it would be companies like companies which are construction contractors. They can be companies in cement sector. So that's one segment on which we are bullish on. We are bullish on private sector banks because we believe that they are structural stories, and the runway for growth available for them is huge. Corporate lenders within private, positive on some corporate lenders, on PSU banks, not very positive on the entire pack, but maybe some of the large ones can do well as this NPA issues get resolved. And consumer continues to be one of our favorite theme to play on. I believe it's considering our demography. I mean, it's a play which is not about a year or 2 years. It's a decadal story, which will play out as we go ahead.
All right, so then let's shift focus to consumption, and I know that you also run one of the consumption-facing funds. My question was to do with a retail investor who has, I beg your pardon, this is very rude of me. Yeah, so one of my question was to do with FMCG companies. A lot of them are trading at high valuations, but they always have in comparison to their peers. So with respect to something like a retail investor who has a substantial exposure to something like FMCGs companies, would you advise them to at least reduce their allocation to these companies, or you would say that no matter what the evaluations are, you will always see growth and you should hang on to these?
Okay, in investing, everything comes at a price. I mean, over a longer period of time, you make money if you buy at right price, and you remain invested as the story unfolds, as the growth really plays out. The growth story may be very attractive, very great, but if you pay a very high multiple at the time of investments, even though the company may do very well, the earnings growth may be very superlative, but your returns may not reflect that. So you should always be mindful of valuation. That's how I would put it. You asked about FMCG. I think the runway for growth available for them is very good, particularly after GST. This unorganized to organized would play in favor of them. And some of them have great brands, they have great distribution network, and they would be big beneficiaries of it. They generate very good cash flows, they have very high ROE, ROCs.
Right.
So on bottom-up basis, some of them would still look attractive from a longer-term perspective.
Now, actor Rajinikanth has announced his political debut on Sunday and has said that he will launch his own party to contest all 234 constituencies in the next assembly polls in Tamil Nadu. That's a move that could alter political alignments in the southern state. It also ends 2 decades of speculation over his entry into politics. In case you didn't already know, Rajni enjoys cult status in Tamil Nadu and in fact in various other parts of the country. At his valedictory address to fans in Chennai at the end of a 6-day meet, Rajinikanth asked for volunteers to see to it that those who prevent amenities and rights reaching the people are stopped. Truthfulness, hard work and growth will be the slogan of the new party. Do good, speak, and only good will happen. That's a rough translation, and that will be the guiding principle. Moving on now, 1.9 crore Indians residing in Assam have been recognized as legal citizens of India. The government released the first draft of the National Register of Citizens at midnight, that is of 2017 and 18, that's last night. The same list will be updated with more names once the verification is completed, as according to the Registrar General of India. 3.29 crore applicants had submitted documents to support their claim of being an Indian citizen. Infiltration from Bangladesh had warranted the move. Now, there's clearly lots to talk about today, being the first day of the year. May not be too much live market action, but clearly lots to talk about in terms of strategy. But there are also several stories on Bloomberg Quint that you should consider reading. Here are a couple of them. First up, the Department of Telecommunications will issue notices to 5 wireless carriers, including Tata Teleservices, Telenor and Reliance Jio Infocom, to recover just over 2,500 crore rupees after the National Auditor red-flagged underreporting of revenues by these firms. The Serious Fraud Investigation Office, or SFIO, is carrying out additional inquiries into the case against a defunct Kingfisher Airlines, which was owned by declared willful defaulter Vijay Mallya. The agency, which comes under the Corporate Affairs Ministry, has flagged various violations by individuals, including Mallya, and entities related to Kingfisher Airlines in a report. Well, that's all that you need to know going into trade today, but up next is Indian Open, and that will take you through opening trade. This is Bloomberg Quint.